Welcome to the presentation on the Wavecom Berhad, a leading provider of telecommunication and consultancy services on the international scale. Hello everyone, my name is Aimina FAR570 and I am a member of the account executive team at the Wavecom Berhad. My ID number is 2022961657.
Assalamualaikum warahmatullahi wabarakatuh, and hi, my name is Nura Azra Mira binti Kabaru Bahri. My number ID 2022947009.
Assalamualaikum, my name is Nuraisha binti Ramli. I'm a member of executive account in Wavecom Berhad. My ID number is 2022961309.
Hi, my name is Muhammad Fauzan bin Muhammad Asnad and my ID number is 20229102883.
Now, I will start with some information about the background of Wavecom Berhad. Wavecom Berhad is a global leading in the telecommunication and consultancy services headquartered in Malaysia, with a strong presence in multiple countries including Indonesia, Thailand, Korea, Japan, and China. The company offers a comprehensive portfolio of voice, data, and internet solutions, along with consultancy services in the areas such as strategic planning and technology implementation. Wavecom Berhad specializes in end-to-end solutions for network design, implementation, and the optimization for 4G, 5G, fiber optic, satellite, and wireless system. Vision and mission of the Wavecom Berhad. Our vision is a global leader in the telecom with expertise innovation, customer centricity, shape future, drive innovation, provide unmatched services, preferred partner for the world-class telecom solution, contributing to industry investments and client success. And our mission is a Wavecom Berhad aims to provide top-notch consultancy service to business worldwide. This includes leveraging in the expertise in telecommunication and technology to offer strategic advice, planning, and implementation support to business seeking to optimize their telecommunications and infrastructure, improve their operational efficiency, and achieve their business goals. Now, we will start with the segment reporting under MFRS 8. Factor to consider having a segment reporting management approach of Wavecom Berhad for segment reporting, considering various factors. Number 1 is nature of product and service. Wavecom Berhad offer telecommunication and consultancy services internationally. Their product and service offering include voice and data services, network infrastructure, cloud-based solution, and telecommunication technology and strategy consultancy. Understanding the unique nature of this offering is essential of effective segmentation and targeting of direct customer segments for business success. Number 2 is the nature of the production process. Wavecom Berhad's production process involves designing, developing, and deploying telecommunications, solution, and consultancy services on the international scale. This process requires technical expertise, infrastructure, and resources, and understanding it is crucial for effective segmentation. By aligning customer segment with the production capabilities, Wavecom Berhad can optimize profitability and customer satisfaction. Number 3 is distribution method of the product of services. Wavecom Berhad distribution methods for its telecommunications and consultancy services on the international scale are critical to consider in the segmentation strategy. Distribution methods may include direct sales, local partnership, or online platform. Understanding the most effective distribution method for different customer segments based on the factors such as location and preferences is crucial for targeted marketing and sales efforts, ultimately helping Wavecom Berhad achieve its business objective. The last is type of class of a customer for the products or services. The type of customer class including individual consumers, SME, large enterprise, or government organizations is a crucial factor to consider when segmenting the market for the Wavecom Berhad telecommunications and consultancy service on the international scale. Understanding the unique characteristics and requirements of the different customer classes allow for targeted marketing and sales effort that align for their specific needs, leading to optimized business outcome for the Wavecom Berhad. Types of segment for Wavecom Berhad, which include demographic, behavioral, psychographic, and geographic. Number 1 is demographic. This involves using demographic characteristics such as age, gender, income, education, occupation, and family status to segment the market. Number 2 is behavioral. This considers consumer behaviors such as purchase pattern and product usage. Number 3 is psychographic. This involves understanding the lifestyle, interest, attitude, and value of the target market. And the last is geographic. This involves dividing the market based on a geographic location. This include factors such as country, region, city, and even neighborhood. Wavecom Berhad used geographic segmentation as their type of segment for telecommunication and consultancy services on an international scale. This is because they operate in multiple countries including Malaysia, Indonesia, Thailand, Korea, Japan, and China. Geographic segmentation involves dividing a market based on the physical location or region of customer. Okay, now let's discuss the Chief of Decision Maker (CODM) at the Wavecom Berhad. What is CODM? Chief of Decision Maker (CODM) is a leadership role responsible for overseeing and making strategic decisions for an organization or team who serve as the Chief of Decision Maker for Wavecom Berhad. The Chief of Decision Maker (CODM) is a Tan Sri Ghazali bin Tan Sri Umar who also holds the position of Chief Executive Officer at the Wavecom Berhad. Responsibilities of Chief of Decision Maker (CODM). Number 1 is communication. Tan Sri Ghazali bin Tan Sri Umar communicates decision clearly and effectively to relevant stakeholders, ensuring that decisions are understood and implemented appropriately. Number 2 is monitoring and evaluation. Tan Sri Ghazali bin Tan Sri Umar monitors and evaluates the outcome of decisions to assess their effectiveness and impact on the organization's performance. He takes corrective actions as necessary and makes adjustments to future decision-making process based on the lesson learned from the past decision. Number 3 is a decision-making process. Tan Sri Ghazali bin Tan Sri Umar established effective decision-making process within the organization, ensuring that decisions are made in timely and efficient manner. He promotes a collaborative approach to decision-making involving relevant stakeholders, gathering and analyzing data and information, and considering different perspectives to make informed and strategic decisions. And the last is risk management. Tan Sri Ghazali bin Tan Sri Umar identify and manage risks associated with decision-making process, ensuring that potential risks are assessed and mitigated effectively. Now, I will pass to Nurul Azra to continue our presentation.
Now, I'm going to continue the presentation on segmental reporting. If a particular product or services of the entity is significant and constitutes as an identifiable business in which the entity operates, then the product or service will be reported as a separate operating segment. For a reporting purpose, a reportable segment is one that meets any of the following quantitative thresholds, which consists of revenue, profit, and assets. As for revenue, its reported revenues from sales to external customer and inter-segment sales is 10% or more of the combined revenues of all operating segments. As for profits, the absolute amount at the segment's reported profit or loss is 10% or more of the greater of the combined reported profit of all segment reporting profit or the combined loss of all segment reporting losses. Lastly, for assets, the segment assets are 10% or more of the total assets of all operating segments. However, not all operating segments need to be separately reported. Operating segments are only required to be reported if they exceed quantitative threshold of more than 10%. Wavecom Berhad primarily provides mobile services and operates in a total of 6 geographical segments, which are Malaysia, Indonesia, Thailand, Korea, Japan, and China. However, not all operating segments need to be separately reported if they exceed the 10% quantitative threshold test. This is our segmental report for the financial period ended 31st December 2021. We choose to apply the revenue test to identify the reportable segments and non-reportable segments. As a result, there are 4 reportable segments in this company consisting of Malaysia, Indonesia, Thailand, and Korea. The result for the total revenue for Malaysia shows a percentage of 27.24%, 34.21% for Indonesia, 13.36% for Thailand, and 12.25% for Korea, where the reported revenue satisfied the 10% threshold test. Next, the 75% rule is met when the total external revenue attributable to those reportable segments of Malaysia, Indonesia, Thailand, and Korea is 87.66%, which exceed the 75% rule. Therefore, no additional reportable segments should be identified. Japan and China will remain as non-reportable segments and group together as all other segments category. This is the new segmental report of Webcom Berhad reconstructed after identifying the reportable segments of the company by using the revenue basis after calculating based on the 10% threshold test and the 75%. The reportable segment of the company that we include here are Malaysia, Indonesia, Thailand, and Korea. Meanwhile, we group the non-reportable segments, which consist of Japan and China, as one under all other segments category. In this new segmental report, the total revenue is amounted to 23,374,250. All in all, Webcom Berhad used segmental reporting to document different geographical areas of the business. The company delights segmental reporting to better comprehend the nature and financial implication of our business activity as well as the economic context which our operate.
I will continue from what have been presented by Azra, which is the advantages and disadvantages for segment reporting. There are several advantages of segment reporting, which can improve decision making. Segment reporting provide more detailed information about the performance of different business units or product lines, which can help managers make more informed decisions about resource allocation, product development, marketing strategies, and other key areas. Next is better resource allocation. Segment reporting allows company to identify which segments are generating the most revenue and profit, as well as which one not performing as well. The information can be used to allocate resources more efficiently and effectively. Other than that, greater transparency. Segment reporting provide greater transparency into a company's financial performance, which can increase investor confidence and help to attract new investors. It also enables stakeholders to better understand the company's operation, risks, and opportunities. While there are many advantages to segment reporting, there are also some potential disadvantages that companies should be aware of, including increased complexity. Segment reporting can be a complex process that requires significant resources and expertise. Companies may need to invest in specialized software or personnel to properly implement and maintain the segment reporting system. Secondly, difficulty in defining segment. Determining how to define segment can be challenging, particularly for companies with complex operation or diverse product lines. There may be disagreement among stakeholders about how to classify different segments, which can lead to confusion and uncertainty. And thirdly, increased regulatory scrutiny. Segment reporting is subject to regulatory oversight, which can increase the risk of audits and other compliance-related activities. These can be particularly burdensome to companies in heavily regulated industries. Moving on to the next slide, we will now present on MFRS 134 interim reporting. First thing first, I will explain about the basis of preparation of the interim report. The basis of preparation of the interim report can either be integral or discrete. The integral method is it incorporating interim financial information into the annual financial statement, while the discrete method is where it uses a separate period for the interim report. It can be seen in Axiata Group Berhad that they are using discrete method for their basis of preparation of the interim report, which their report is prepared quarterly on a periodic basis of 3 months for each quarter. And also, as stated in the interim report, there was no other significant event of the interim periodic that requires disclosure and or adjustment as at 16 February 2023. Continuing with the next slide, we identify 2 accounting policies used in preparing the interim report of Axiata Group Berhad, which they use Financial Instrument MFRS 9 and Business Combination MFRS 3. For the first policy, which is MFRS 9, financial instrument fees in the 10% test for the recognition of financial liabilities, it is stated in the explanatory notes that during the financial year to date, Smart Axiata Company Limited (SMART) received a notice from Ministry of Posts and Telecommunication of Cambodia to pay one-off additional fees for the use of the microwave equipment from year 2016 to 2021, amounting to $24.2 million and penalties of $16.2 million. The fees and penalty to be settled in 4 equal installments. Smart paid its first and the second installment of $10.1 million each on 19 September and 12 December 2022. The remaining installments are due in March and June 2023. For the second policy, MFRS 3 Business Combination Reference to Conceptual Framework, on 30 November 2022, the company and DG completed the merger between Celcom and DG. Pursuant to the merger, Celcom and DG were merged by way of a transfer of the company's entire equity interest in Celcom to DG, where the company received the consideration shares comprising 3.8 billion new DG shares representing 33.10% of the enlarged issue, DG shares issued by DG valued at 15.5 million to the company, being an investment in an associate of the group and the company. Next, I will pass the presentation to Fauzan.
Now, I will continue about interim report. Interim report is the report of financial results of any period that is shorter than a fiscal year. A company may choose their report half-annually or quarterly. Axiata Group Berhad prepare its interim report quarterly, which is from 1st October 2022 to 31st December 2022. So, the minimum content should be present at the complete or condensed financial statement. So, there are 5 types of interim report, which is condensed statement of profit or loss and other comprehensive income, condensed statement of financial position, condensed statement of changes in equity, condensed statement of cash flow, and last but not least is selected explanatory notes. And this is condensed statement of comprehensive income. And this is condensed statement of financial position. And also, this is condensed statement of cash flow. And this is condensed statement of changes in equity. And last but not least, this is selected explanatory notes. Now, let's take a look about the period for the current and comparative for each statement prepared by the company. We analyze interim financial reporting of 4th quarter for Axiata Group Berhad, which start from 1st October 2022 to 31st December 2022. As for statement of profit or loss and other comprehensive income, the current interim period is 3 months, starting from 1st October 2022 to 31st December 2022. Next, cumulative year to date is 12 months, which from 1st January 2022 to 31st December 2022. For comparative period, the current interim is from 1st October 2021 to 31st December 2021, which contains 3 months. Meanwhile, cumulative year to date is 12 months, starting from 1st January 2021 to 31st December 2021. Next, the second statement is statement of financial position. There is current interim report, which start from 1st October 2022 to 31st December 2022 for 3 months reporting period. Meanwhile, the comparative end of the year is starting from 1st January 2021 to 31st December 2021 for 12 months period. Other than that, there are also statements of changes in equity. For cumulative year to date, the reporting period is 12 months, start from 1st January 2022 to 31st December 2022. Meanwhile, the comparative year to date, the reporting period is 12 months, which start from 1st January 2021 to 31st December 2021. Last but not least, statement of cash flow. For cumulative year to date, The reporting period is 12 months, start from 1st January 2022 to 31st December 2022. Meanwhile, the comparative year to date, the reporting period is 12 months, which start from 1st January 2021 to 31st December 2021. Now, I will explain about two adjustments being made by the company to be included in the interim report. So, the first one is Axiata Group Berhad acquire new telecommunication network equipment for 450,000 on credit to enhance quality service. Here are the extract of statement of financial position in before and after adjustment in interim report. So, before adjustment, plant, property and equipment amount is 27,201,035 ringgit. After additional equipment has been acquired, plant, property and equipment amount increased to 27,615,035 ringgit. Not just that, loan bank also increased from 0 to 415,000 ringgit. Next, second adjustment is on 1st November 2022. Axiata Group Berhad had issued new ordinary share amount 300,000 unit share, RM1 each to raise the capital for company. Here are the extract of statement of financial position in before and after adjustment in interim report. Before adjustment, share capital amount to 13,914,272. But after company issue new ordinary share capital amount increased to 14,214,272.
Now we continue with questions and answer sessions.
Question 1. What if a segment does not meet the 10% criteria? The answer is, first, it can be designated as a reportable segment despite its size. Second, it can combine with other identical segments that are also below threshold of significance for the purpose of meeting 10% test, or it can be included in all other segment category.
Next, what is the difference between operating and non-operating segment MFRS 8? The difference between operating segment and non-operating segment is that operating segment mainly engage in business activities from which it earns revenue and incurs expenses, and operating results are reviewed regularly by entity chief operating decision maker for decision making purpose. While a non-operating segment, on the other hand, may generate revenue or incur expenses, but it is not considered a core part of the entity business operation and a part of the entity that does not meet the definition of an operating segment.
What are the reasons for interim reporting? Number one is timeliness. Interim report provide more up-to-date information compared to annual report, as they are typically issued quarterly or semi-annually. This allows stakeholders to assess the company's financial performance and make informed decisions in a more timely manner. Number two is decision making. Interim report provide valuable information for decision making purpose, such as assessing the company's financial performance, identifying trends, and evaluating risks and opportunities. This information can be used by stakeholders to make informed decisions about their investment, lending, and other business transactions.
Now, question number 4, which is, according to MFRS 134, what are recognition and measurement principles of interim financial reporting? As we know, MFRS 134 provides guidance on preparation and presentation on financial statements. Okay. Now, the appropriate answer is, for recognition, interim financial statements should recognize and report events and transactions that are material to the interim period. This includes revenues, expenses, assets, and liabilities that are incurred in the interim period. Meanwhile, for the measurement based on the same accounting policies used for annual financial statements, except where those policies are no longer appropriate or relevant to the interim period. Well, if any change be made during interim period, the impact of the change should be disclosed. So, overall, the recognition and measurement principles of interim financial reporting under MFRS 134 require companies to apply the same accounting policies and principles used for annual financial statement. Meanwhile, also recognizing and disclosing any material events or transactions that occur during the interim period.